One of the most important investment lessons I ever learned came from a client who sold their family business. For more than 40 years, she and her husband had built a wonderfully successful small business. It was their livelihood and it was their identity. Really, it was the only financial world they'd ever known. Eventually, they sold their business and received a multi-million-dollar payout. From the outside looking in, it looked like a dream come true. Financially, they had really won. But a few years later, she said something to me that I have never forgotten to this day. She said, "David, sometimes I wish that we didn't sell our business." And I remember being taken back by that comment. Not because they didn't receive enough money, because they did, or not because the transaction went poorly. The reason was much, much deeper than that. She had spent 40 years learning how to run a business, but very little time learning how to live without one. My name is David Fagan, and I spent over 2 decades as a chartered professional accountant, helping business owners, professionals, and families build stronger financial futures. And over that time, I've noticed something really important. For many business owners, investing eventually becomes their second career. Not because they went looking for another career, but because one day their business may get sold, the capital arrives, and suddenly their future depends on understanding how markets work outside the business. They go from operating a business to operating capital, and that's a very different skill set. In my client's case, she was pushed into a completely new world. Investment statements, yields, withdrawals, market fluctuations, and conversations with wealth advisors. And quite honestly, it was overwhelming for her. That conversation, it taught me something important that I have never forgotten. You don't want to learn investing for the first time when the stakes are the absolute highest. In a previous lesson, I talked about total wealth performance. And one of the ideas that sat inside that lesson was availability. When does your capital actually become available? Because that moment, it matters. A business gets sold, an inheritance arrives, or heaven forbid something life-changing like a divorce happens, and suddenly there is a significant amount of capital just sitting there. And then the question becomes, well, what do I do now? The problem is that some of the biggest financial decisions that people often make happen during some of the most emotional times of their lives. Not because people are irresponsible, but because life, it gets complicated. And when life is complicated, uncertainty often creates delays. I've seen people leave large amounts of money just sitting in cash for years while trying to decide what to do, when to invest, how to invest. That delay has a real cost. Cash can feel safe, and in the short term, sometimes it is. But over long periods, idle cash can quietly become one of the most expensive decisions people make. The market and compounding doesn't wait. And your future self, they can't go back and get those years back. This is why I believe people should start learning how to invest before a major liquidation event ever happens. Not by trying to become a professional stock picker, or not by trying to predict every market move. No, but by trying to understand the basics. How do broad-based index funds work? What does it mean to own the market? And what does volatility feel like? How do you follow a simple strategy when emotions start to rise? Really, it's like riding a bike or learning how to ride a bike. You can read about it, you can watch someone else do it, but until you actually feel the bike wobble underneath you, you have not really learned it yourself. And investing is very similar to this. You need to feel the wobble before the stakes are too large. It may start with something as simple as really understanding how your registered investment account works. Or for business owners, it may be a corporate investment account inside a holding company. The account itself does not matter. The point is to start building the muscle. Start small enough so that you can learn and feel how the ups and downs are. Start small enough to watch yourself react, because that is often where the real education happens. You learn whether you panic when the markets fall, whether you are tempted to wait for the perfect entry point, or whether you can stay disciplined long enough when the headlines are loud and noisy. Is your strategy simple enough to actually follow? And quite honestly, I understand how hard these things can be. I've made versions of all these mistakes myself. There may be times where we thought there was a better entry point or a clearer moment. But sometimes waiting for a clearer moment is just another way of sitting on the bench. And when you sit on the bench too long in investing, the opportunity to learn the game, it starts passing you by. This is why investing is not just about making money, it's a lifelong education in business, psychology, decision making, patience, and freedom. It teaches you opportunity costs, discipline, and most importantly, it gives yourself future choices. That's really important. Investing is the process of buying future options. For business owners, I think this matters deeply because one day nearly every business owner will leave their business. And when that day comes, investing may become their second career. The question is whether they have prepared themselves for it. Don't wait for the money to arrive for you to learn how the markets work. Start early, develop the muscle, build the roadmap. Your future self will thank you later.